What's going on, guys? Hope you're having an absolutely fantastic day. So today we need to talk about why Snowflake stock is crashing after its earnings report, right? So we can look at this and we can maybe decide maybe is this an opportunity or this is something that we want to look at, right? So you can see Snowflake stock is at $206 after hours, losing about 22% of its value in just one day, right? So apparently this has been the theme for growth stocks in 2021 and also 2022, right? I'm not saying whether this is justified or not because I'm pretty sure that in 2020 and also 2021 we were in the whole mania phase of this market, and basically everyone is saying, oh, the Fed will never raise rates and things like that, right? So look how time flies. Today is March, and the Fed is probably raising rates next week, right? So what is Snowflake? What does Snowflake do? Snowflake enables data storage, processing, and analytics solutions that are faster, easier to use than and far more flexible than traditional offerings, right? Or so they say, right? Because this is obviously from their website, right? So let's take a look at the Barron's article and then maybe we'll discuss about it more. So Snowflake stock is sharply lower in late trading Wednesday after the cloud-based data software company posted disappointing fiscal year 2023 guidance, right? So right off the bat, I just want to say that this actually suckers in a lot of investors, right? So cloud-based data software company, I don't know who in their right minds can understand this, right? So just want to quickly say I'm no Snowflake expert, right? But I've been looking at the software as a service space a lot and a lot. So another company I'm more familiar with is Palantir, and I'm pretty sure what they do is quite similar. So cloud-based data software company, I think this kind of names basically sucker in a lot of investors that don't really understand what they're doing and think that they're doing some magic, right? So let's just continue talking about this. So one of the most expensive cloud software stock by almost any measure. So I'm not going to comment whether it's expensive or not. I really don't know how to value this company at this point, right? Because it's still making losses. Its revenue is growing like crazy. I'm not sure whether it's sustainable or not. So, and one of the sector's fastest growers, right? You can see there's a reason why all these stocks have all these mispricings, right? Because like me, most investors cannot really accurately price this stock at its right value, right? As you can see, if not, this would not happen in a single day, right? Maybe it's down 5% or it's down even 10%, but 22% a day is clearly telling you the whole market did not know how to price this stock, right? So Snowflake stock was vulnerable even to a modest disappointment, and you want to avoid this kind of stocks, right, as investors, right? Because you can see that vulnerable to even a modest disappointment, right? So you can see that there's no margin of safety there, right? That's what I really want to say, right? But after this decline, maybe there is a margin safety, maybe there isn't. I'm really not sure, right? So in late trading, Snowflake shares are down 20% to about $210. So Snowflake ticker Snow went public in September 2020, right? Again, during the mania phase, right? And again, this is another thing I want to stress about IPOs, right? I've talked about it in previous videos and I'll continue talking about it, right? Don't participate in IPOs because they are a seller's market, right? When a company wants to go IPO, they want to sell as expensive as possible the shares, and the buyers want to buy it as cheap as possible. So you can see that there's a very clear conflict of interest. So Snowflake, for the quarter, Snowflake posted revenue of 383.8 million, up 101%, and ahead of Wall Street's consensus forecast of revenue of 372.6 million. Right? So you can see that clearly the revenues are growing like crazy, 100% in a quarter. You got to be flipping my flapjacks, right? As Jeremy would say, right? So product revenue in the quarter was 359.6 million, up 102%. So you can see that this company is growing very, very fast, which is exactly the point, right? Why it can be mispriced like this, right? Because when a company is growing very, very fast like this, everyone expects it to continue, and even sometimes the management expects it to continue because they are also blinded by the results, right? If you have 5 quarters of 100% year over year growth, I think you as a management will be quite confident that in the next quarter we will also have 100% year over year growth, right? Sorry, quarter over quarter growth. And this is in basketball what we call the hot hand fallacy, right? It's when a basketball player sinks like 5 hoops from the half pointer line and everyone expects them to continue doing it, right? So Snowflake does not provide overall revenue guidance. So this is another point for the market to misprice, right? Because if it doesn't provide overall revenue guidance, how are people supposed to value it, right? So, and at one point, this company is trading at a 70 price to sales ratio, right? So 70 times your revenue, right? So depending on how fast you can grow revenues, that multiple might be justified, right? But at the moment, I'm still very confused on how to value this company, right? So non-GAAP gross margin was 75% in the quarter. And I just want to say, right, anytime you see a company that has 75% gross margins or 80% gross margins, right, these are companies with huge moats, right? Because if they didn't have this like large moat, they can't charge this kind of gross margins, right? So adjusted free cash flow was 102.1 million or 27% of revenue. That's very good adjusted free cash flow. So Snowflake CEO Frank Slootman said in an interview with Barron's that the quarter was exceptional, but he considered that the revenue beat guidance by a little less than in other quarters, right? So you can see that the CEO has clearly sandbagged that their guidance in order to beat every quarter, right? So Slootman said one reason is tied to the company's unusual consumption-based revenue model, right? So this is the same revenue model as AWS, where they charge based on usage, right? So however much you use, however much you pay, right? And I think a lot of people really like this model nowadays, right? So yeah, that's about all the things that are useful in this article. So you can see the full year revenue and all here. If you're interested, just go and read this Barron's article, but there is nothing more for me to really talk about here, right? So one thing to mention about this article is that expectations in the stock market are incredibly important, right? So just because of a little expectation shift, you can lose 22% in the stock, right? So beware of where you put your money, right? Because a lot of people, again, expect it to go 100% year over year and quarter over quarter, and the moment they say, oh, instead of 100%, we expect 93% now, or 90%, and the stock will just tank like crazy, right? So another comparison to this company is obviously Palantir. Is a stock that I mentioned, right? And you can see Palantir is down 65% in the past year and a half, right? And basically this will be the same story when Snowflake opens tomorrow, right? It will be down about 50 something percent, right? So you can see that all this software as a service stock in the midst of 2020 and the 2021 bull market, clearly they have gotten very overvalued, right? So now that they correct 50-60%, this is the time to be interested, right? A lot of people will be running away from the stock right now, and I just want you guys to take a look at the stocks, take a look at what's happening in the fundamentals, and then make your conclusion, right? So in my opinion, I understand Palantir more than Snowflake, therefore I think Palantir is a more suitable investment for me than Snowflake, right? But I just want to end this video with this book, right? The Little Book of Valuation by Aswath Damodaran, right? So I don't agree with everything this guy says, because he says beta equals risk, which I definitely don't agree with. This is a very traditional version of risk that he's talking about, right? But a lot of things that he talks about, I really do concur with, right? And one of the things that he talks about in this book, right, is the basket, right? So now the question is, what is this basket, right? And basically this basket is the comparison, right, of the same industry, right? So basically we call it a basket of stocks because all the same stocks in the same industry doing the same things, and we compare it together, right? So at one point, Snowflake was selling at a 70 price to sales ratio, Palantir was selling at a 35 price to sale ratio, and Datadog is selling at a 50 price to sale ratio or something around there, right? So obviously all these companies are those tech companies that are growing very fast. Now the question you have to ask yourself, right, and this is in the book, right, obviously, you ask yourself, is the whole basket rightly valued? Because in the dot-com bubble, right, you can say that, oh, you know, I don't think Microsoft is overvalued because look at this other AOL or Cisco or whatever it is, they have a price to sales of 100 instead of Microsoft's 50. But you have to ask yourself, right, is the whole basket overvalued? And sometimes clearly, very clearly, the whole basket is very overvalued, right, as you can see. So just take note of this thing, right? When valuing things, don't use relative value, right? You have to look at absolute value, right? If the stock market historically has returned 15 price to earnings, means in 15 years you double your money. So now that you look at maybe a 30 price to earnings and then you say, oh, there's no other alternative, but you have to remember what you are buying. Is doubling your money in 30 years acceptable to you? To me, that is not acceptable. So I wouldn't buy the S&P 500 at the moment. So that's how you should look at things, right? Not on a relative basis, but on an absolute basis, right? Is this good in every way, shape, or form? Or is this good only compared to its competitors or whatever it is, right? Because if it's good only compared to its competitors, but on an absolute basis, it's very bad. It's a very bad stock compared to absolute basis, right? Why would you care that it's doing better than its competitors? It's like dropping rats into a radiation bucket and saying that the ones that survive the radiation bucket is stronger than the others. Yeah, sure, it's stronger than the others, but it's not stronger than the overall rat specimens that you don't drop into the radioactive bucket, right? So that's about all I wanted to share today. If you did enjoy the video, be sure to smash up the like button, hit subscribe, and also hit the bell button, right? And with that being said, have a fantastic day ahead and peace out.